Oh, hi, good morning. Srini Dadi from Dadi Cryptos. So, today I thought I'll quickly cover where we are with the cryptos to Saturday morning, August 3rd. So, cryptos are doing reasonably well. Bitcoin is at 10,750 when I last saw, and Bitcoin Cash at 330, Ethereum at 222, and Litecoin around 90, 98 or so. With Ripple at 31, around 32 cents, but it's shy of 32. So it's been uptrend, about 3 to 7% up. Bitcoin Cash especially touched 340 yesterday, so it went up by like 12-13%. There was some profit taking. So overall, it's a bullish market right now. I covered the impact of interest rates and stocks from last week. One of the lower end stock for the stocks. I think this year that was one of the. It lost close to about 800 to 1,000 points, and more to come. I think it's been inflated. They're trying their best to keep it up by reducing the interest rates, but it's not getting there. They need one more interest rate down, or maybe 25 basis points more, but I think there's long ways to go. Anyway, today I thought I'll also focus on what's Bitcoin, why it's important, why it goes up, comes down, what dynamics, and how do you trade. Okay, I want to dispel some based on what I know. I've done a lot of research on this. I'm a technologist. I know how this technology works, how it operates, and I've been with Bitcoin now for over 4 years now. Okay, Bitcoin is underlying technology is called what's called as blockchain. Blockchain is a ledger. If you're like it's an Excel spreadsheet. Okay, it keeps track of every transaction that happens. The one difference being that nobody can change the blockchain, meaning they can't change the ledger. You can't go in and make changes, erase any transactions or update any transaction. That's why it's single source of truth, and every transaction that happens gets recorded. Okay, that's what blockchain is, and a ledger is. Block and chain. Block means it's writing in blocks, so it all these transactions they are grouped together, and they're written in a graphs block onto computers. Okay, so what's different with blockchain and there's a term called distributed ledger. A ledger is where you keep writing the transactions. It's a financial term, right? Uh, Bitcoin is financial, right? It's used only for trading and for transacting and storing values and stuff like that. So when it comes to storing, uh, most systems store in a centralized system like a mainframe or a supercomputer, and if the computer gets hacked or if it crashes, then you lose the data and you struggle to recover it back. Now when you recover, you don't know what you recovered is accurate or not, because there can be changes or the files can get corrupted and stuff like that. With Bitcoin, when this was introduced about 10 years back, this was introduced after the 2008 financial crisis, and I'll explain the timing of that and why it's important now, because we are in historic times right now. So when it was created in such a way that there's a term called mining. So Bitcoin software uh, is can be downloaded onto computers across the world, and that's what has happened. And mining is actually your running that software on your computer. In order to run the software on your computer, as we know, it does take energy. It takes power. So mining is basically you're mining for the transactions of Bitcoin on your computer using the energy that's used by the computer. Now, the transactions are pretty large now, so it does take a lot of energy. Okay, so one Bitcoin roughly takes about 3,000 to 4,000 US dollars of energy. Okay, so it's not cheap. That's how much it does. Nothing comes cheap. Like it's like gold, right? In order to get gold, you have to mine, right? The only thing that's cheap is paper currency, like US dollar, Indian rupees. There's no backing. You just print. Okay. They used to be backing by gold, but in '71 they removed it. So right now every country is just printing their own currency in paper, right? And they'll have some bonds and treasury bills against it, but end of the day there's no backing. It's just trust. It's trust of the government. We all trust our government that they're doing the right thing. And you see the federal government keeps changing the rates, and depending on the interest rates, how they change it, the economy crashes or it goes up. Stock market goes up, stock market crashes. It's all kind of variable. The variability depends on what the Fed's interest rate do. So back to Bitcoin. So Bitcoin blockchain, in a sense, is housed in thousands and thousands of computers across the world. Okay, and those who host it are called miners. They're extremely big players now, because the Bitcoin is now over $300 billion. Cryptos, especially Bitcoin, is close to 200 billion. In order to transact 200 billion worth, there has to be lots and lots of computers mining it. So even if one computer crashes and is kind of compromised, there are several hundreds of thousands of computers storing this blockchain. Okay, so that's basically kind of in a nutshell what Bitcoin is, what blockchain is, and what a distributed ledger is. So there's no one central place to hack into Bitcoin. So you don't hear people talking about hacking into Bitcoin. Hacking happens in exchanges. I'll talk about exchanges in a bit. Exchanges are different. Exchange of wallet is different than a Bitcoin. Okay. There are 21 million Bitcoins possible. Okay. So Bitcoin has it has multiple digits. I think it's eight digits, 8 decimals. So the last decimal is called a Satoshi. Okay. Now, who created Bitcoin? They say Satoshi and all that. I don't want to go into all that. That's all. It can't be created by one person. It is created by technologists. It is very, very robust. Since I'm a technologist, I know that there is artificial intelligence built into it. What that means is, if you try to hack into Bitcoin, it will self-correct. Okay, so this is one of the most strongest and safest software that's ever written, in my opinion. Okay, I've been in this IT technology field for a long time, so I know what I'm talking about. There's no way anyone can ever hack into Bitcoin. People do hack into exchanges or wallets that hold the Bitcoin. Exchanges and wallets that hold the Bitcoin, trading platforms, are private entities. Okay, folks create a company, they create all these wallets, they try to transact these Bitcoins, they try to save it, and some of them get hacked and they lose their Bitcoins. That's what you hear in the market. It's not the Bitcoin itself gets hacked, it's the exchanges that get hacked. Okay, so back to Bitcoin and 21 million. There is a fixed amount, that's 21 million, and about 17 million have already been mined. Okay, since 2008 till 2009 till 2019, there is another 5 million that needs to get mined. So in a sense, the quantity is fixed. So in supply and demand, as the demand goes up, the quantity is fixed. So obviously, what has to happen? The price has to go up. Okay. So that's why Bitcoin now is at 10,000, 5 figures, 10,000. It's been there now for a couple of months now. It's probably going to go higher because there's more and more demand, and because the supply is fixed, the only way up is for it to go. As more and more people are interested in a Bitcoin, there'll be more demand. So you don't need to hold a Bitcoin. So like I said, it has 8 decimal places. The last one is called Satoshi. So so the goal is that as more and more people get into it, you'll be getting fractions of bitcoins. Someday it'll be called one satoshi or 100 satoshis or so. So one bitcoin will be equal to a million satoshis. Okay, so that's kind of in a nutshell where things are. Bitcoin started as and it's a worldwide platform. Okay, Bitcoin is mined mostly in China. I know China keeps saying it's banning and all that, but end of the day, all the miners are in majority of the miners are in Asia, in China, in Korea, now in Europe, Canada, and a lot of people in US do mining too, right? So it's a truly worldwide platform for digital currency. Okay, so now transactions happen amongst Bitcoin exchanges, or you can transfer a Bitcoin. It's a 60. So in order to hold a Bitcoin, you need to have a Bitcoin address. It's like a PO box, a post box. Okay, so it will be a 16-digit hash code. Hash code is a cryptic. The reason it's called cryptography is these numbers are cryptic, right? It's supposed to be secure. So you'll have like a combination of alpha and numbers, numeric. So these alphanumeric numbers will be used as a public address. Okay, and then the Bitcoin itself is a private number. Okay, so every Bitcoin will have one more hash code. So within the address, you store the Bitcoin. So the Bitcoin belongs to the address, not to the human. So if you lose your address, you lose your Bitcoin. It goes to the person who has it. That's why they say it is not traceable. It is actually traceable. Every transaction that happens on Bitcoin is traceable. Actually, the US dollars or cash or Indian rupees is not traceable. If you take 100 rupees or 1,000 rupees or $120 bill or $100 bill and cash and give it to someone, there's no traceability of that unless you do a online transaction or a digital transaction. But Bitcoin, every transaction is traceable. Every one that holds has a PO box number. If you know the number, you can go into blockchain.io or blockchain. There are a number of tracking sites. You just key in that number. It'll tell, it'll tell from which PO box it has gone to whom. Okay. Now the identity of that is held by the exchanges. An exchange is like a Coinbase. Coinbase is an exchange, or Bittrex is an exchange, or Binance is an exchange. Exchange is basically like a bank. Okay, so they hold the public PO boxes on behalf of their customers. Okay, so it's the reason I'm mentioning all this is you guys need to know. What I'm saying is probably not. Most people don't know this, okay, and they keep talking about it, and they will listen in the media that it's all fraud and people are hacking and it's used for black money, and no, it's not. Okay, maybe some parts. I mean, even in dollars and Indian rupees is all corrupt, right? People use it for corruption. So it's the behavior that matters, not the technology. That this technology is unbreakable, artificial intelligence. Every transaction is tracked, and it's very secure, and there's no third party involved. The reason this came into play in 2009 after 2008 crash was people didn't trust banks. So if you know what happened in Iceland and in Greece went bankrupt. So this was very popular. Bitcoin was very popular in Greece because people didn't trust the banks. So they wanted to save and transact and use a digital media that did not include the bankers. So the bankers don't like Bitcoin because they're losing their control from the paper currency that moving away from banks onto this Bitcoin. Okay, a Bitcoin is a Bitcoin no matter where you go in the world, right? That's a universal currency. Whether you have a Bitcoin in US or whether you have Bitcoin in Germany or whether you have Bitcoin in anywhere else in the world, it is still a Bitcoin. The value of Bitcoin is the same. Depending on which country you are, the value changes depending on what you're trying to transact with. Okay. So that in a nutshell is Bitcoin. There are a lot of Bitcoin ATMs. There are a lot of Bitcoin all over the world. There are a lot of, like Bitcoin wallet. You can transfer from one person to the other. A lot of businesses now are taking Bitcoin, like Starbucks and Overstock.com and some airlines, and so they're all gearing up for it. There is Bitcoin. Every transaction of Bitcoin is captured. So when you do transact within these, at least in the US, using these exchanges, they need to give you a 1099. So a 1099 is a reportable a report to the IRS. So you got to file your taxes. So no different than doing stocks. Okay. What else I wanted to cover? I think those are the big ones. I'll talk a little bit more next time on. Today I wanted to talk about why Bitcoin. What is the significance of Bitcoin, and why it's important, because with the next financial crisis coming, which is just around the corner, Bitcoin will play a big role, right? Because again, same thing will happen. The banks, people will panic, then they look for alternatives. The alternatives now are gold and Bitcoin. So last year it was gold. So gold, if you remember, last time, 2011-12, gold went up to like $1,500 or $1,800 or $2,000. So now people are much more aware of what's going on. So Bitcoin comes into play, and it'll, since it is relatively secure and easy to transact, and it's, as long as you have a phone and there is Wi-Fi and there is power, Bitcoin will be there. Now a lot of people said, oh, you lose Wi-Fi, you lose power, you lose your Bitcoin. If you lose power, you lose Wi-Fi, there are bigger things to worry about. You can't even live. There won't be water, there won't be power, there won't be gas. Amazon will be down, your banks will be down. Nothing operates, as we know, without power. Okay, or without Wi-Fi, or without your digital technologies. So that's it for now. So today I covered what's Bitcoin, why Bitcoin, what's the significance. Next I'll talk about more on how to trade Bitcoin.